This is Marshall Gidler, head of investment research here at FX Primus, bringing you my daily comment. We've got not one, not two, but three central bank meetings coming up on Thursday. The Reserve Bank of New Zealand, the Swiss National Bank, and the Bank of England. Now, only the RBNZ is a live meeting, that is, one where a change in policy will be actively considered and probably implemented. That doesn't mean the other two are of no interest to the market, though. Now, starting with the RBNZ, analysts are pretty unanimous that they're going to cut the overnight cash rate by 25 basis points to 2.5%. The reasons include below target and slowing inflation, the slowdown in China, the main destination for the country's exports, an overvalued currency, and the potential impact from a strong El Nino, which is likely to hit their important agricultural production. Now, at the previous meeting in October, they said that, quote, some further reduction in the OCR seems likely. Given that the market expects a cut in rates, the point to watch won't be whether they cut rates, but whether they continue to say that further reduction in the OCR seems likely. Personally, I think that after 4 rate cuts this year, they're likely to move to a more neutral statement with no bias as to the future direction of rates. That would probably be positive for the Kiwi. On the other hand, if they retain their easing bias, that could be negative for the currency. Then we have the SNB. This will be a major meeting for the SNB as it includes an in-depth monetary policy assessment and their twice-a-year press conference. I expect them to revise down their inflation forecast, but probably not enough to force any immediate change in policy. Recently, Euro-Swissy has been gradually trending higher, meaning there's no urgent need for them to change their policy. I'd expect them to reiterate that they stand ready to intervene in the FX markets and ready to lower rates further if needed. But once again, to keep their target range for the 3-month Swiss franc LIBOR rate unchanged. The result may be a slightly weaker Swiss franc, particularly against the dollar. Finally, there's the Bank of England Monetary Policy Committee vote. The outcome of the meeting is more or less a foregone conclusion, no change in policy, so the focus will be on the voting pattern. Now, one of the 9 members of the committee has been voting to hike rates recently. The big question is whether anyone will join him, or on the other hand, will he back down? Given that there's been little change in inflation since the last meeting, and if anything, the growth in average weekly earnings has slowed a bit, I can't see much reason for him to change his view, nor for anyone else to vote to hike now. So I expect little change in the Monetary Policy Committee's view of the economy, and therefore little change in sterling following the meeting. Now get more market insights on our educational pages and turn your trading ideas into action with FX Primus, the safest place to trade.